This week, Ben and I are talking about the rollback on certain tariffs, a pause for 90 days, looking at general green across the board in the commodity market front, along with a decrease in inflationary pressure. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
It's going great. It's a beautiful spring day and can't wait to get out and enjoy some of it a little later today. So,
It
how are
is. It
you?
is. I'm doing well. I enjoyed one of the best Masters in recent memory over the weekend. It was really great to watch, and got me fired up to start this week. And talking about fired up, and we have a lot of green across the board on the commodity market front. So let me give a quick rundown on the price changes. This is as of Friday's close. Looking at the corn market for May, up 30 cents at $4.90. Soybeans for May up 65 cents at 10.42. Soybean oil on May is up 1.51 cents per pound at 47.35. Soybean meal by the short ton up $16.50 at 299.60. May wheat up 26 cents at 5.55. Looking at that May cotton contract up 2.53 cents at 65.89. Rough rice for May up 0.43 cents per counterweight at 13.505. And then that West Texas Intermediate crude oil contract down 49 cents a barrel at 61.50. So Ben, we have gains across the board. Really some large gains in there, and then that drop down on the price for that crude oil contract. So this time of year, was that really telling you as we move through the planting season?
Well, so as a producer, this is exactly what you want to see: higher output prices and lower input costs. As far as this time of year, what does this tell me? Well, if we were in a normal year, this would probably tell me that we're having some major planting issues across the board, or some external factor that's impacting the markets. This year, I guess the external factor is trade talk and a lot of trade news. Removing some of the uncertainty around which products might be impacted has helped allow some of these commodities to rally, and certainly for the feed grain markets, some tighter fundamentals. USDA last week came out with their April WASDE and decreased corn ending stocks more than expected. So there's not a lot of cushion if we do run into a weather scare this summer within these grain markets, and you remove some of that uncertainty, or you pause some of that uncertainty for a period of time, and it allows grain markets to have a nice rally. So,
Well, Ben, in kind of the wake of a lot of the, international or just global discussion around tariffs and some trade discussions, we've seen the U.S. dollar value dip to a nearly a 4-year low, and really that's helping support a lot of these exports on the global market, making them a little bit more competitive, even if there might be some tariff pressure there. So, looking at the situation, that's encouraging, things to go out the door, especially during this pause, this 90-day pause on tariffs to everywhere except for China. And even though it is a pause, there's still that kind of baseline tariff that was added by the administration. But when you're kind of looking at these moving parts on both sides right now, it's for at least temporarily a positive picture, it looks like, for commodity crop prices.
sure. So, what we've seen here, pretty much with every country is, there's a broad across the board tariffs. You mentioned the 10%, and then we had all the retaliatory tariffs as well. Then what kind of happens is then there's a list of exemptions that come out of products that are exempted, in the hopes that other countries will also kind of relax some of their duties as well. And certainly we've seen a broad scope of that. I do think there still is some pressure in this dollar index, that traders are kind of concerned about the long term. Not just traders, consumers as well are concerned about the long term, and that's pushed our U.S. dollar index relative to other currencies to a 3.5-year low. So when we take just the dollar side of this into the equation, this certainly helps make U.S. exports, more favorable than other products around the world, just relative on currency. And then, the reverse is also true. A softer dollar makes our input costs a little bit more, stuff that we're importing that we might use in input production a little bit more expensive.
Yeah, well, Ben, looking kind of the value of the dollar and another angle, the looking at inflationary measures, lower than expected, both the consumer price index, and the producer price index, both coming in lower than expected, and there's even an expectation of some increases maybe potentially. But really, a positive sign you'd imagine as the Federal Reserve looks at what they might be doing to try and control inflation.
Yeah, so we had both the CPI, the Consumer Price Index, and the Producer Price Index, the PPI, come out the end of last week. Both came in below expectations, and in fact, both showed a month-over-month decline in prices. Now, don't get carried away. We still had a year-over-year price increase, so a little soft month over month, but at least in the case of the CPI, it still rose 2.4% from last March. So still increasing prices, just at a lower rate, and certainly here as of late, just a little bit of softness. Of course, the different products matter here in terms of what's seeing some softer prices and what's seeing some higher prices. But I think all this kind of ties into consumer sentiment, right? So like, the expectation around prices and the demand for prices is partially driven by consumers' willingness to buy. And we saw the initial consumer sentiment for the month of April come in at a 50.8 reading. Keep in mind, it wasn't that long ago that we were talking about 90s, 80-point readings, and this has dropped all the way down to 50. Consumers have cited a magnitude of different reasons, and all of them seem valid. From concern about their job and for future earning potential to just the higher prices that we could see. So um, it's I think all of these indicators, whether it's the U.S. dollar, whether it's the inflation measures, whether it's the consumer sentiment, all of them are pointing to where people are less confident that they're going to have money down the road to spend, and so they're actually taking some time now to tailor in their spending. This is something that, frankly, was our current level of spending, I would argue, was unsustainable. So we needed a little bit of pullback. We'll see how long this lasts.
Well, Ben, talking about that current level of spending being unsustainable, I I see things, a lot of things to discuss on social media related to the amount of credit that's being used to purchase things, a lot of credit card debt climbing for a lot of Americans since the pandemic. So that is kind of interesting seeing that finally pull back. But also a lot of the discussion and maybe why the sentiment has dropped so sharply. I've seen a lot of commentary on the potential for a recession around the corner. You've seen firms like Goldman Sachs putting out estimates that they expect a recession in the near term, and then walking that back after the pause on tariffs, and then saying, well, it's still kind of lingering out there. So, just general discussions like this kind of make that sentiment from consumers pretty cautious, I would assume.
Well, in general, this is just human behavior. Humans love to talk about the worst case scenario. It's what sells headlines. It's what draws attention. I can even tell you when I'm doing Outlook meetings with producers, producers are more engaged when I'm painting a bleak picture for a commodity than when I'm painting, a rather bullish picture for a commodity. So this past winter, my Outlook talk was pretty favorable towards corn and kind of bearish to soybeans, and everybody wanted to talk about why the soybean picture was so bearish rather than the bullishness to corn. So there's just a lot of human behavior around painting a bleak picture for something, and we do it all the time, all of us, and that's not to say that we're pessimists. That's a very different type of thing. It's just this is what we focus on, and so to your point here, like there's a lot of there's a lot of stories out there about how the policies aren't good, and all the downside of it. Um, but also, I would sit here and say, we've got a still a pretty resilient economy. Things continue to tick along, and yes, prices and consumer sentiment are declining, but they or well, they're slowing. Prices are slowing, and consumer sentiment is declining. But it's still we still got a pretty solid economy under us. It's just what we were currently spending at the rates we were currently spending was unsustainable.
Ben, it sounds like a lot of what you do, or I'd say about 60% of what you do is work as an economist, and about 40% is work as a psychologist, it sounds like.
Well, so there's a lot of truth to a little bit of that, right? So,
Yeah.
I always say that things are probably not as bad as what they seem, and they're also probably not as
Not
good
as
as
good
what
as
they
what they
seem,
seem.
right? Like, I mean,
Yeah.
it's we live somewhere in this middle, and reminding people to kind of walk back off the edge is always
Yeah.
important.
All right. Well, walking through the rest of this week, what should farmers and ranchers be paying attention to? They could move the markets, good or bad.
Well, so by the time our listeners get this today, the NOPA report should be out. So today's National Oilseed Processors Association report. So be on the lookout for that. I'll be interested to see U.S. retail sales on Wednesday morning, just kind of another measure of how much we're spending on product. And then the rest of the week is pretty standard. Export sales on Thursday, commitment of traders on Friday, and then Monday, we get another round of crop progress and export inspections. So, a pretty standard week for us, which is welcomed after a couple of very busy weeks with stocks and planning intentions. April WASD, we've had a lot here the last couple of weeks.
Well, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, you can check us out at brownfieldagnews.com. Also, look for us on Twitter. Ben's handle is at BenBrownMU. Ben, thanks again. I'm Will Robinson on Brownfield.